What is going on, ladies and gentlemen? Welcome, welcome, welcome. Happy hump day, guys. It's never hump day. Well, on Tuesdays, it's not hump day, guys, because we're fucking it up. But anyway, I'm your host, guys, the Digital Goat Man. As I said, happy hump day, guys. Happy Digital Wealth Wednesday. So it is 7:05 here in South Carolina. That's where I'm at, guys. So hope everyone's had an amazing trading week so far. For you guys, I don't know what I do. I pretty much show people through the market of foreign exchange, pretty much how I personally navigate through the market. So, that's what you're going to get overall, guys. That's the gist of it. Now, my approach is just from TradingView, guys. So what most of you must know, you investors that's out there, is that you need to use one of these applications, which is MetaTrader 4 or MetaTrader 5, utilizing the information we go over in TradingView to input that in your phone or your computer, whichever platform you're trading from, guys. So let me pull my charts up, guys. But our topic today is just going to be very basic. I wanted to keep it very basic this week overall, guys. And what we're just going to be discussing is break and retest. And I think a lot of people misunderstand that, or I think a lot of people get into like a complex form of trading where they actually go against the basics. You know what I'm saying? They go against the basics of the market. And guys, to be honest, man, foreign exchange is pretty simple. But we pretty much stand in our own way from actually being continuous to be profitable, guys. So that's our look today. So I'm only going to look at, I believe, GBP, JPY. I obviously got to talk about the dollar, guys. Let's actually look at the dollar before I even get into the whole scenario. But as you guys know, man, I got to be comfortable when I do my live streams. So allow me to go on my library real quick. Why is it not? All right, we're good. We're good. We're good. Okay, cool, guys. So I will be honest, man. I've been doing you guys a disservice because I have not been on Bloomberg like I'm supposed to be. I do that to get a grasp on what the economy is trying to move like, guys. And I really think it's important to understand what these economists, these other investors, these analysts are talking about, because it's helping you understand where your money is going or how you should position your money. So I haven't been on Bloomberg. So really our approach today, well, any other news outlet, I've been falling short of that, guys, for the past 2 weeks. So we're really just going to come from, the sentimental knowledge of what we already know in trading, but also the technical approach. So that's all we're going to do utilizing today. Now, I'm not going to really go that in depth into the dollar, but again, guys, I believe, and I stand by this, I believe that we're not heading into a recession. But does that mean that we're out of the neck of the woods? Absolutely not, guys. In all honesty, whatever direction the economy is trying to take, it's kind of not impending doom, but at the same time, people should be worried, actually, because what we're seeing right now is the possibility of just inflation slowing down, but inflation is absolutely still here, guys. So I believe that, but even if we were to get triggered into a recession, that's still bad. So either way you look at it, guys, I wouldn't say you're quote unquote screwed. I don't want to really use that term, but it's really time to understand how you need to be maneuvering your money, your assets, guys, and open yourself to changes in your income pretty much. So again, you guys know I've always talked from the perspective of invest in a dollar. Whatever the dollar is doing, invest in it using one of these trading platforms, guys, on the stock side where you can invest in futures. You can buy or sell the dollar when it's doing that, guys. Again, you would have to learn the basics of market structure, period. And it's universal to all markets, but that's neither here nor there, guys, because obviously if you've been on my calls, that's what we're talking about. But again, guys, I really stress that again, I don't believe that we're heading into a recession, but that's not saying that we're out of the neck of the woods with things being affected into our economy in a drastic way, right? So look at the dollar, guys. I mean, this is a perfect example. If we were just starting off, or we were starting off with the dollar, guys, this would be a perfect example of break and read. Well, not a perfect example, but the structure that it needs to, guys. You have enough information. So let's kind of use the dollar before we move on to, GBP, JPY, and other. Why is it not letting me? I may have to move from Mac. But anyway. So if you just look on, let's just start off at the 4-hour time frame without getting too crazy. You guys already know how I approach the market. If you've been on my calls before, but if you haven't, just pay attention and cipher through my old videos, because that'll help you get an understanding of how I gauge the market. But overall, I try to keep it as simple as possible. I can get super fancy, guys, but the fancy you are, it tends to stray away from the opportunity to make money, right? So if you just look at this, guys, again, just keeping it basic, right? Form of structure. If you look right here, even if let me close out my EMAs, and we'll use that on the other pairs, right? Let's just keep it real simple. If we didn't have anything distracting us besides the candlesticks, guys, if you see right here from this position, what is that? August 10th at 11 a.m. And I talked about this last week. Was this last week? I can't remember. But remember, I believe that it was going to be a break and retest on a previous high, but it actually came down lower, guys, actually creating structure support. Now, it left a wick there, which pretty much is signifying if the dollar does try to approach this area, it will probably crash through it, or just create structure on the other side. It could dip a little bit lower, creating structure and then bringing the market back up. But we can't worry about that because we're not even there right now. This is the important part, is that even though that you see a wick right here, which that means, the market, the banks went up in here and moved that position fast. So this probably was affected by 7 a.m. Probably some sort of news that went on. I don't think this was like, one of the committee meetings that they have, guys, because this was at like 7 a.m. in the morning. That's Eastern time, so that's like New York Stock Exchange time. But something triggered that for the market, especially on the 4-hour time frame, to really move away from this structure. So that's the key indicator to kind of look back at it, guys, and say that, man, we're really not done down in this support zone. But that doesn't matter right now. What matters is what price action had already done. If you look at it, guys, this is an uptrend, right? From this position, this is an uptrend. We identified that this was a bullish harami last week. So it claimed 100% of that movement, which is absolutely fine, guys. You know, again, you've seen what I've talked about before. So, you know, the market has the ability to either return 100%. We talked about that, 120%. We're looking for, if we're talking about reversals, we're looking for reversals normally in this area. So within the 628, 786, you know, 100%, we're looking for a reversal as long as the trend is strong in that direction, guys, obviously, right? And we use pretty much a candlestick pattern to identify that, not to get, you know, too technical. Again, I don't want to get off topic, guys, but again, understand that this market is bullish. If I didn't know what bullish was, I just have to look and say, is the market physically going up, right? The market is physically going up, right? Everybody agrees to that. The market is going up. Even if I don't know nothing about foreign exchange, I know that this market is going up. So guys, what we're taught to do is pretty much create structure zones, which you can draw a line if you choose. But I don't limit myself to a line because that'll make my brain think that if price returns to that level, or I need for price to turn to that exact price or around that level. Now, you can be specific like that, but I normally try to create the zone because if I have an alert and I put an alert to notify me, hey, the market returned back here and I'm looking for potential buy entries, it could miss it, not trigger the alert because I restricted myself to like a level versus a zone, if that makes sense, guys. So I just go with zones, and if it comes within that zone, I'll know that, all right, I need to be looking for said buy, right? Now, if you look at this market, guys, in order for continuations, we do have to have returns. So break of structure, that's the important part to understand. Break of structure, right? So the market broke out of this previous high, and again, guys, super basic. So you would have to know what even creates an uptrend or a downtrend, guys. Let's kind of go through that as we're talking about break and retest, because if you're new on this call, I understand you might even be like, what are you even saying to that degree, right? So if we're looking at if we're looking at trends, guys, in order for a trend, you know, to be valid for an uptrend or a downtrend, it has to have a series of either higher highs, higher lows, or lower lows and lower highs, guys, right? Once it starts breaking those areas and continuing that direction, you now have further confirmation that that trend is what you named it, right? So right here, guys, we have, at that point, we have a lower high, right? Right here. Excuse me, we have a higher low. I always say that backwards. We have a higher low because it's higher than this low, but it sparked from this lower low down here, guys, right? So let's do this. Now follow along with me, guys. We're not gonna go too deep into, you know, talking about like what a trend is, but again, I want everybody to really understand this concept because sometimes we go too fancy that we forget what we need to focus on when it comes to the basic. So lower low, LL, HL, right? Now it created a lower high, right? Now it created because this high, this low is higher than this low right here. You see what I'm saying, guys? So now we have, higher high. And we have a higher low. Now we have a higher high. Now we have a higher low. Now we have a higher high, higher low, so forth, guys, right? You understand me? The reason why this is a higher high, because this is higher than the previous high, which would have been right here, guys. And you have a higher low, which is higher than the previous low. You see what I'm saying? Without to get confused. Now that's important because once it starts breaking those levels, such as a previous high or a previous higher high, and then it returns around that area, so we can't see it because it's a line. Now, if you go to candles, shy of it, but really, again, guys, that zone part, but it did respect this, right? It did return a certain percentage, because even if you just marked it up with your fib, from this low point. 38%. That's pretty good. Shallow retracement, signifying this the trend is strong in that direction. But either way, guys, we needed price to break out of this area, return down to it. But now we have a level of support, right? Now, what you're looking for is the same continuation. Same thing up here, guys. And sometimes it's going to be implemented by a wick instead of just structure of a candlestick. But that leaves you to be like, okay, well, since I'm getting wick retest, price could decide to come back here if it doesn't continue in that direction. So you have areas of opportunity, guys, where you can look for the market to return potentially and then buy off that, if that makes sense, guys. So one, we're confirming the trend, but we're also confirming areas that the price may want to return, guys. Pretty simple, right? Pretty straightforward. Right here, I can clearly see this is consolidation on a 4-hour time frame. So again, we don't have any area that the price is necessarily trying to go. It's moving sideways right now. So we don't have any idea what price is trying to do. But when it breaks out of this zone, that'll literally tell you, well, it will basically tell you that where price is trying to go, guys, right? So once it breaks to the top or to the bottom, you'll have an idea of what price is trying to do. That's price action, guys. Again, if we're not even following fundamentals, this is the best we can do with the information that we have, right? So, even when you're looking at consolidation, that's when candlesticks come into play. As you guys see, it's 7:19. If you've been on my calls, like I said, 8 o'clock is really like prime time where I look to really try to find entries in the market because that allow the dollar to catch up and open. Is the dollar even open? Right now, the dollar's not even open right now, guys. So it could gap up. I could see it gapping up. If it's deciding to retest these areas, I can definitely see it, gapping down, bringing the market down, and then pushing the market up. But as far as we know, the one thing that I like to assess is that when I see consolidation, I look at where the trend came from, right? After the consolidation, right? So right now, until we have more information, we have to treat this as consolidation because the dollar isn't open right now. Man, I think I cut myself just now. But anyway, the dollar isn't open right now. So I have to believe that after this consolidation point, when the market starts figuring out what it wants to do, that it's still bullish because of the previous move it made. It started consolidating towards a level of resistance, if you see that, guys, right? Now, I know that the market closed, and if you look at it, guys, it kind of had its retest. So it kind of makes a little bit more sense when you start drawing it out because on this side, it looks like consolidation. But now that we're establishing there is a level of resistance there, kind of spot out a little bit more, right? It looks like price is rejecting this area only to continue up. I mean, the market isn't open right now, but doesn't that, from my experience, guys, doesn't that look more realistic? Because again, if we turn it to Hakanashi's, which measures momentum, we should probably see that the market is showing signs of still being aggressively to the upside with, recovery that's going to pop up anyway, guys. So you see how these candlesticks were forming. Now, true, the market started slowing up here and brought the market down, but same concept, guys. Look at this. You have the flat bottom, aggressive momentum, flat bottom, aggressive momentum. You consolidate it right here. So we have an example of what it's done before: flat bottom, aggressive momentum, flat bottom, so forth, so forth. Now we're pretty much at a phase where it's like we're pit stopping. We're pit stopping to figure out what we're trying to do. But, overall, if it decides to come back to these levels, we've expected it. But if it decides to continue up, guys, we also can take advantage of that as well. So that's really, I would say in a nutshell, the break and retest, but let's use this on a live market and not just use it on the dollar, which is, it hasn't opened yet, guys. But I want you guys to see that one from a different currency perspective. From a different currency. So, you can trade the dollar as an index, but also using the same thing we just used on another currency pair or a commodity, guys, or an indice. So you can do the same thing with US 30. You could do the same thing with S&P. You could do the same thing with Bitcoin. I will tell you that crypto has probably the best market structure, even though some people don't believe it. It's just because how people trade that market, right? has some of the best market structure out of there, guys. I'm telling you from firsthand experience. It's just about that, because of the way that crypto moves in a digital way, people forget that, man, I have to take my income, or I have to only go for this certain amount and then wait for the market to pretty much reset, yo. You can't treat it as like foreign exchange, but the concept is still there, or the foundation. I wouldn't even say the concept. The foundation of break and retest is still there, guys. So let's actually go to GBP JPY, because I was actually looking at that. Now it's crazy that GBP JPY kind of looks like the dollar. I had a resistance zone up there as well, guys, with GJ. So same concept, guys. So let's do our top down analysis and then go into, all right, let's figure out, after the market is broken out of a certain area, where it may return, or has the market actually broken out of a certain area. Again, guys, you can only assess. You don't know at the end of the day. You're not going to have an accurate, I mean, you will, but every time is not going to be like a quote unquote sniper entry, or, an accurate display in the market, guys. It's just really analyzing, collecting enough data to make a decision within it, guys. And if you really stay the course of remaining basic, you won't get carried away with, trying to figure out all the fancy smancy stuff that's supposed to, I guess, create billionaires or millionaires in this market, guys. I haven't seen, like, yeah, you want to know more to help, break down the market a little bit easier, but that can also kind of get chaotic at the same time, guys. So let's do our top down analysis. And I think I'm going to clean this up because I'm not really feeling how GJ is looking right now. Oh, no, that's good enough. That's good enough. So I actually spoke about this to one of my business partners, where I was using the market pattern, guys. Now let's start off on the monthly time frame, right? So I talked about this. Now, when it was Sunday, the British pound, Japanese yen, British pound did open up it opened up bearish, right? So pretty much up until Tuesday. What day is that? Was this last week? This couldn't have been last week. No, this was this week. 15. Yeah, so up until Monday night or Monday evening, guys, the market was selling. So from the time the market opened up on Sunday, it started selling down. Already had this level of structure here. And what I was saying to my business partner is that now I was using the candlestick pattern. This would have been great to talk about pretty much last week, right? So I was using a candlestick pattern because, again, guys, you can kind of identify things a little bit early ahead compared to everybody else, but you don't want to get to the point where it's like you say that's what it is. You say that's the potential, and if it reacts that way, then you put yourself in the right direction, right? So I was establishing that I believe that this was it could have been, if it continued, this is where you go into your analyzation of like the potential direction or what the market could be doing based off of the outcome, right? Based off of the things, the conditions that arise for you to be able to say, okay, now I know that I just need to wait for a retest and the market is going to do this, right? So I had this, support / previous resistance zone, as I would like to say, right? So what it did was create support after it started selling down, right, guys? Initially on Sunday when the market was open, it looked like a tweezer top. Man, I wish I would have had my website up. Again, I still need to push that out for you guys, right? Let me see if I can get it, close enough to what it's supposed to be looking like, right? Now there's two versions of this, guys. You have a tweezer top and then you have like a tweezer bottom, right? Okay. Let's do the tweezer top. And I'm trying to get this as close as possible, so don't fault me if it doesn't look like that. Well, I guess since we have the, I need to do the tweezer top. So basically it's followed normally by two equal candles, them being either bearish or bullish, guys. And what you'll have is a doji, or, you know, probably a smaller candle to the left of it with another candle behind it, right? It's not always going to be accurate like that, but, you know, follow along with me, guys, right? I'll push out something, like I said last week, for you guys to look at. And if you already know what a tweezer bottom or tweezer top is, that's even better, right? This market, this thing is not letting me. So this is my doji, right? Now let's go with that, right? Yeah, this is just not working for me right now, guys. But anyway, look up tweezer top, tweezer bottom, because I don't want to push this trying to draw something that people are like, what, right? So when the market opened up, guys, this was a selling candle, right? It still had its wick, but the market was like pointing down. Well, it actually was a bearish doji. So what a tweezer top would have been, which this has the conditions, because a tweezer top would be at a high point in the market, guys, right? So what we're looking at is that we have two equal candles, right? You see, this was bullish, this was bearish, right? This candle on Sunday was a bearish doji. So something similar to this, except it was gray or red, whatever you got for your own. Now, if it would have completed as a tweezer top, it would have had a selling opportunity. So the market would have been extremely bearish. But guys, it rejected this. Now, we still need a candle to close because this is a monthly time frame. But if this thing starts continuing to be bearish, and then by the end of this month, bullish, and starts continuing to be bullish the rest of this month, and you have this doji over here, guys, this just turned into a tweezer top, right? A tweezer bottom. So this is signifying, one, because we identified a candlestick pattern, the continuation of a trend on a monthly time frame. And really, I wish we would have spot this last week, guys, because again, what we were going over is, it really shows you how powerful candlesticks are if you identify it, guys. Again, you still have to be patient enough for the close. I don't expect you to identify a movement on a monthly time frame and say, man, I'm gonna wait a whole month for this to close. Like, nah, probably, you know, weekly, daily, just go through your regular routine. But that's how powerful using a candlestick pattern is. You know, especially if you identify it on a higher time frame, you could just find your entry and ride the wave if you are a swing trader or quote unquote position trader, right? But again, that's what I'm looking at. And I told my business partner that I believe that price might retest and reject off this area, which it did. You know, came past a little bit, and then, you know, start to pretty much show bullish momentum. And that's what it's doing right now, guys. So for this month, technically right now, we're currently bullish. We just have to continue being bullish, guys. And I do think that GBP JPY is strongly bullish right now. As far as the data price action showing me right now, I do believe we're strongly bullish. But when I look at the DXY, because what else is attached to JPY if you're trading just currencies, guys? USD JPY. Whoa. If that's the case, that means the dollar has to get stronger than the yen, right? So you'll start to see similar currency pairs that, you know, are attached by the same currency. The same country. So such as like all the pairs attached to the dollar, you'll start seeing them do similar things. It may not be at the right time because it's not its market session to be strong. But when you identify that, you can really start going through like NZD JPY, be like, well, I'm gonna enter in the buy once I find my position. AUD JPY, same thing. Not at the same time, guys, but when they're market session and when they pretty much come down to completing their cycle. That's why I like to call them trading cycles, which they will come down and, you know, retest those previous zones or support zones or break the resistance. And you can sit here and say, man, I could just be buying all these for a whole month. You see what I'm saying? So, you know, it's powerful to identify candlestick patterns, but let's keep it basic again. And as you see, same thing. So if I'm just even starting off on a monthly time frame, from here, we have bullish momentum, right? Clear as day that the market is hawkish or bullish, whatever you want to say. We're buying right now. So as far as we know, the market has been buying. Right now, we're kind of, stopping for gas, consolidating, moving sideways. But even with the wicks, guys, did the market not return to this area that it once broke out of? Yes, it did. It did it aggressively, super aggressively, but now it started maintaining support with these wicks up here, guys, establishing a new level of support, even if you don't like it to say that, man, because once we get a break, then we'll know, like, we need a break of a candle. But once we get a break, then we'll know that, okay, the market is actually trying to come down here, do its retest, yada, yada, everything that you need to know, right? So you'll start seeing it create these support zones. And again, don't be fooled, because on the higher time frame, the wicks aren't, you can't really display the wicks the same way you would on a smaller time frame. Like on a really smaller time frame, I would look at wicks as like liquidity areas, right? But on a higher time frame, until we start showing signs of coming back down here, I have to treat this as what? Structure in the market. And this is absolutely structure in the market. I like what I'm seeing right here. Now let's go into like what happened pretty much today, throughout this week, within 4 days, or really on a smaller time frame, because we understand that we're bullish, right? Everybody's like, okay, we're bullish. We're just climbing down to areas that we need to revisit to create support, or are we turning into a selling market? Let's figure that out right now, guys, right? Okay, so this was the zone that I had marked up. I don't know when I had marked this zone up. Oh, I think I had this zone marked up last Tuesday. So the reason why I depict mine as like, I have like the blue and then the red, because what I want to tell myself is that was resistance that could turn into support. You see what I'm saying, guys? That was once resistance that could turn into support. But again, the momentum, let's look at the momentum. Momentum is strong to the upside, guys, as you see, super strong. The only thing we need is a recovery, really one more retest, and I think we'll get our answer around 8 o'clock, guys. But again, I don't expect the market to try to come all the way down here just yet. It will, because it has to return back to this area, probably even lower, if it doesn't just take flight from here, guys, because again, the momentum is super strong to the upside. So it could just take flight from here, guys, but you want to establish areas that you think the market will return. Well, I don't see enough information. I mean, I see it, but if I'm just a new trader, maybe I'm not seeing enough information to see, okay, where could it possibly come down to? You know what I mean? Where is it done retesting? Is it deciding to continue to break out? And then let's also turn it to a line chart too, guys. I think that'll kind of help as well. Oh, I didn't mean to do that. Let's do that first, actually. Okay, you're not really seeing what you would like. This is more of like consolidation and then a breakout of it, guys, which is, hint, hint, consolidation and a breakout. So let's go down to the next lower time frame, see if we see anything a little bit different. Okay, we do see something different. What do we see? A previous high on the 3 hour. So what could I do? I can establish that as another area that the market broke out of and may decide to return to, especially if the momentum is still high to the upside, guys. You understand what I'm saying, right? So let's kind of turn it back to a candle. Again, establishing that break and retest. Now, we know that the market could decide to say, hey, man, I'm actually pushing down more aggressively. But has there been any resistance being made? You'll have to check that, when you analyze the market, guys. But that's just to keep you an open option to say, hey, man, this is an area with the momentum aggressively to the upside that the market could decide to return down to, or it could decide to go lower, as low as it wants to be. But it has to be valid within the confines of a buying market, if that makes sense, guys. So you don't want it to start breaking structure so low that it's like, man, this thing may be reversing completely and you're over here having buy positions and the market's really actually ready to reverse. So you have to analyze that based off of price action. Again, it's 737. So we don't have enough data, guys, to pretty much present that the market is gonna what the market is necessarily going to do. I haven't even checked to see if there's any news on the Japanese yen. Let me actually look at that real quick. I'm using the MyFX book app, so hopefully it works. No, I'm gonna have to go on the internet. I mean the net. Hold on, guys. I'm checking for news real quick. See, now news doesn't really give you an edge to be able to say, oh, I know what the market is gonna do. Look at this, in 12 minutes. Look at that. In 12 minutes, we got it's low impact news. So I'll let you guys see real quick before we go back. How come that's showing me that and I'm not seeing? Oh, because it's low impact. So I only have medium and high impact displayed on my internet browser, but there's low impact news with the Japanese yen, guys. So any news is gonna make the market react. Depending on the intensity of the impact, that's gonna tell you how volatile it is. So if it's high, like for instance, Australian dollar within an hour, I don't even know what's going on. Unemployment. Oh, their unemployment rates are coming out, guys. Oh, they have an employment change. I'm gonna have to look at that. So pretty much high impact. That's a volatile market. Pretty much at nothing. We behind, dude. Oh, I'm tripping. That's 21. Okay. 9:30, guys. So in 9:30, Australian dollar is gonna have high news. So if you guys are trading the Australian dollar or New Zealand dollar, be cautious with that. But we do have news. If you see, guys, we do have news, low impact, but it'll still make the market react. So it's still for you to keep caution of it and not just, oh, well, it's low impact, so I know what the news is doing, but check to see what it says. So it's their foreign bond investment, guys. So should have an effect on their stocks or any stocks related to the Japanese yen, but I don't see it being, super volatile to get between the prices. Blah, blah, blah. You can research that on your own time. We're not here for that today. But yeah, with news coming out in 12 minutes, guys, you want to be cautious of that. Well, what's going on in 12 minutes? 8 o'clock is pretty much around the corner, guys, if you look at that. So that's also why when you see those low impact newses that comes out, guys, that's why you always want to be cautious too, as well, when you're just trading. And it's like top of the hour, try to stay out of that. Try to stay out of half hours, guys. And be cautious of news pretty much, no matter the impact, because it may not react to the market like that and just, cause it to move how it's going to move anyway. But again, guys, you don't want nothing disrupting your probability chances, you know what I'm saying? Because that's all it is. But so what I would do is, for me, I kind of like this area. I do think that we're probably going to get a bounce off of here, but let me see if I can spot like candlestick pattern going on. Whole thing right here looks like an inverted head and shoulder too. So I don't see the opportunity for GBP, JPY until we get that news, but I am looking for this area. Because right here we have structure. Have a whole support structure right there. Which price could decide to return there, right? But overall, guys, if it's going to continue its trend, if we're looking at break and retest, should be somewhere here, should be somewhere around this area. What I've identified is pretty much structure in the market that will support, really. So support in the market And the market could decide to come down here. But for me, guys, if I see it come down here, I would have to believe that this thing is actually trying to sell further down than we think. But again, I just wait and assess. The overall trend is that it broke up out of this area, should want to return to pretty much this consolidation, or somewhere within the consolidation, right? And how do we know that? Well, let's turn it to a line chart. Consolidation right there. You guys look at that. Probably half of the consolidation. Trading is definitely interesting, guys. It will test your patience and test your mental for sure, man. Because if you don't keep it simple, then you start overthinking what possibly could be. I find stuff that, I keep in the back of my head because I want to know that if the market starts showing signs of, structure being broken, things like that, then I can take advantage if I'm in the complete wrong direction. One thing I don't want you guys to believe that every trader is just calling shit right. You know what I'm saying? We've been very successful on YouTube since I really started going live. I think we've done, as a team, as a community, I think we've done a total of 3 trades. We lost the week before. Did we give out a trade last week? We did Euro USD and we hit TP1. Yeah, we hit TP1. So yeah, we did give out a trade for Euro USD, TP1 smash. So we've done 4 trades and lost 1. So we're 3 for 1, guys, right now. But again, I don't really look at the ratio because again, we could lose a lot of trades, and because we're doing proper risk management, guys, we're still winning. You see what I'm saying? But again, I don't want you guys to believe that even with everything that I'm teaching, things that you're learning on your own, that you're just gonna win. You really determine how much you win. But I'll save a mentorship for trading, like a mindset focus, for another day, guys, because I do think that that's important, especially with me in my 4th year. Once next year hit, I'll be in my 5th year, guys. And I'm telling you, man, it's been a journey, but a journey that was worth it so far, guys. So, I don't want you guys to get it confused that anything that you identify is supposed to be right. It's just supposed to put you at better chances than you just looking at this being like, this is a good area to buy. This is a good area to sell. You know what I'm saying? Like, the temperature is right and the way the sun is emitting, I'm gonna just go ahead and sell. Like, nah, this is not how this works. It's confusing and, a lot of material, but at the same time, once you get that foundation, guys, it really becomes like basic. You are your own worst enemy. And if most people were to keep it basic, we will probably have more millionaires as traders, guys. You know what I'm saying? I hope to be one of them. I'm not there yet, guys, but I'm climbing that ladder. And it takes with reinforcing this myself, but also with you guys as well. Understand, if you're out there and you're like, I'm a trader, I would advise you to teach, because you'll start saying stuff that will reinforce what you need to be doing in your mind. Because again, guys, we know how we are as traders. By ourselves, sometimes some of us are a hazard, even though we're good at this market. I've seen people who make, $50,000 and then below that the next week. They have the income for it. Most people will be like, I'll never do that. Okay. When you start seeing large quantities of income, you don't know what the hell you'll do. You know what I'm saying? That's why you get the mindset early on, so that way you could be in a safe space. So right now, guys, it's holding this position right now. So I want to see if it's going to come within this zone. But if it does, this is what I'm going to do. I'm going to look at, guys, pretty much draw using the long position or the short positions for buyers or sellers. So I want to give like 2 positions. I want to give a potential of where the market may come, and then us do our risk to reward management from there. And I'm gonna give you guys 2 entries. So where I think the market may come overall, and then an early entry if price just bounces off of that. So I would like it to come as low as this. I hope it doesn't come as low as this, because then that would make me believe we might have a bounce off. price will return here and start to continue to sell. But let's pretty much analyze the market, guys. I do think this is just your basic, hey man, I'm gonna break and retest out of this structure, not keep it too difficult. And then 8 o'clock come, boom, we get our boomerang to the top side. Right now it's maintaining that. But again, I don't know how that news is gonna affect the market. But again, good eye to spot, guys. Good thing we did look at news, because we would have been over here like, this is how we had our stop loss hit last week. Now, we went in profit, but nobody's really, I mean, not last week, the week before. Nobody's really looking for the, hey man, I went in profit 5 pips. Unless you're using like crazy standards, then it's like shame on you for leaving that money right on the table. But I don't think most of us are man, I lost my train of thought there, guys. I always do that. But anyway, I'm looking at 2 positions. So I want it to come within this position, and I'll give a level, and you guys can pretty much distribute your risk from there. As you know, I try to keep it light when it comes to my risk to reward ratio, guys. I don't really try to go above what I know I'm willing to risk. Again, guys, this is you know, up to you as the person who's investing your income, right? So if you're going to take this, understand, you know, you're doing it at your own risk, but also you're creating parameters if you're not going to use my parameters. Now, I know there's some guys on there that's going to use my parameters. Understand, keep that risk management. So if you know you don't have the income to lose, don't, even if we've had success in the past, don't try to just Hail Mary it and be like, well, you know, the past couple of trades I did go in profit, so I'm about to over leverage with this one, you know, with Antoine. I don't advise that, guys. I just advise keeping, you know, the threshold, because again, those small wins or those accurate wins will start to build up to a big ass account for sure. Well, let's look at this. Coordinates. Let's do 500. Okay, yeah, let's do 500 for like our early entry. That kind of aligns with this area right here. And if not, what we'll do is have, but we're waiting because 8 o'clock is not around, right? So we'll have another entry that's at, I need to establish this. This is where I need to find like the low. All right. I mean, it's basically right there, but. So we'll do this to clear this. This will be our early entry, but if price makes its way down here, that'll be our main entry. Hey guys, again, man, if you guys are finding value, make sure you guys are subscribing, but also commenting. You know, I don't want to just a bunch of subscriptions. I want you guys, you know, to give me some feedback on, you know, things that you may be struggling with, or things that you would like to be explained a little bit more in depth, or just straight up criticism like, yo, bro, you suck. You suck, bro. So like, I don't even know why you on here. I'm open for it, guys. You know what I'm saying? I'm not going to say that, you know, I won't be a little bit hurt, but you know, constructive criticism, you know, I got to know what my downfalls are. But you know, I've been getting great feedback from the ones that's been commenting or, you know, talking to me on via social media. So I definitely appreciate it, guys. You know, like I said, I'm trying to make sure we combat this for the community. So it's not just something that I'm pushing together, but something that could be of use for people for like years to come, guys. You know what I'm saying? Free of charge, man. Get it while it's hot. Let's do an exit right here because we have structure there. Like I'm just in time because I'm like super hungry right now. I don't even know where that came from. All right, exit. Keep it light, 100 pips. I mean, obviously, from my experience, guys, that's on the call, if you can reach farther or you're riding a continuation, have at it. But let's just keep it plain and simple. You know, for the new people on the call or the people that don't know how to properly exit a trade, you know what I'm saying? So let me see. Let's get rid of that because we know that that's support already. And we're waiting for it to come into any one of these areas. Let me see what the pip count is. So about 10 pip difference, guys. So if you enter in the early entry, why does that say early? If you enter in the early entry, you'll be 10 pips behind. If you enter in this entry, and it pops up from here, we'll pretty much have like a sniper entry, guys, okay? Yeah, so understand that if you guys enter early, you just got to add 10 pips to whatever the lot size is. I mean, not the lot size, stop loss is, guys. So if you have to adjust, then adjust, how you see fit. You know what I'm saying? Let me put this last one up. So I'm going to put an alert right here. And I do want to look at gold real quick, guys, because gold gave us a perfect example of like break and retest this morning. And I want to see if it's still actually falling because it definitely shows signs that it was on a bearish tear. And it just, perfect, dude. Wednesday morning, when you really look at it, like, yeah, it seems aggressive. So if you were trading with a crazy lot size, and yeah, it seemed way out of way out of the ballpark for you. But the move that gold made this morning, it was pretty docile. So I didn't really see, well, what I saw was some good structure that it created. So I was excited with that, but I also knew that, man, that's kind of like the topic that I wanted to go for today's call because I didn't have any agenda. But again, we really need to emphasize the basic or the small stuff that people like to ignore. Excuse me. Confirm this. So y'all got it. Look at it real quick. I'll come back to it before then, especially if our entry hits. Yep. Earlier right here, guys. So earlier today, gold pretty much gave you your break and retest. So it's dancing around this area, playing around as you see wick projection. So again, guys, on the higher time frame, it'll probably be okay, but you still want to keep an eye out for like the wicks, because as you see, gold pretty much attacked wicks on both sides. aggressively here, which was pretty much structure. So if you did one of these numbers, I mean, you probably would have missed that entry if you didn't have an alert, but that was clear structure right there, guys. A form of break and retest. And what happened is that this move happened, I think, last week. So this was the move from Sunday. So Sunday, price got bullish to pretty much collect liquidity, to pretty much get enough gas in order to bring the market down, guys, right? Clear as day, broke structure, right? Now you got to look at each time frame, or higher time frames, to pretty much establish, okay, was that a break of structure? But again, guys, line chart. So if I drag this out, I can see that, in fact, gold did retest the area that it broke out of. Now, is it going to try to create a stronger structure of resistance over here? So is this support now not just trending, but trying to turn into a new level of resistance? Possibly, guys. But as far as we know right now, Hakanashi, trend is strong to the downside. So with the retesting it's already been having, guys, you have one retest right there. You have a retest right here. As far as I'm seeing it, gold is pretty much coming down, guys. You just have to find your entry point, right? And again, we have areas where it could possibly do break and retest. I mean, keep it simple. Simple, stupid, easy, right? Oh, this is what I meant to. Did it not return to that area? Now, it may return to this to try to create the resistance that it's looking for, but we have points of entries all over, guys. Right here, gold could stop short. It could really just stop short of this. This is where you kind of start diving deeper to see where are these areas that price could potentially retest based off of like candlestick movements, liquidity points, Fibonacci, whatever you got, guys. So as far as we know it right here, unless this is a fake out, which 8 o'clock is about to come, we can probably say that gold will probably at least come back up here to create this resistance. If not, somewhere in the ballpark of this area, like 618, 50%, definitely like 50%. But I can see it creating resistance. I would allow it to make room, but guys, as far as we see it right here, gold has in fact created structure where, and this is, I like this view because now we're looking at it from a selling objective. So it had resistance. This was your support. It broke the support. This is where gold popped up. Well, no, this morning is where gold popped up. Then, pretty much slid down, shot down for like, I think this was like 50, 60 pips, and then broke back up. You see? Confirming, okay, well, we are in a downtrend. So as far as we know it, guys, we're continuing in our downtrend. Let's look at it on a 4-hour real quick. See if it makes sense. So I break it down here and see if it makes sense. It makes absolute sense to me. We just needed to collect a percentage of this liquidity right here from this candle. And it'll normally be like 50%, but I mean, we have an area that gold can come up to. I could see it coming all the way to 786. So I just measure, for me, guys, this is kind of like a pro tip. I just measure the candle if I already have the idea of where price will come to, you know what I'm saying? Like if I know the direction and I'm not trying to necessarily find an accurate entry, but just measure what percentage that, that candle that's open right now, currently on that time frame, what percentage it may reject. And that'll kind of give me an idea, okay, what the market is trying to do. If it's trying to continue in this direction, if it's trying to get bullish, so forth and so forth, right? Let's look at GBP, JPY. It is 8 o'clock right now, guys. So I'm gonna look at GBP, JPY for like a second, so you guys can kind of have it again. And then we're pretty much closing the call. So as always, guys, man, again, if you forget, please like, comment, subscribe, and just let me know, guys, what more would you like to see? You know what I'm saying? And make sure you use proper risk management. So I normally say 805, 815. Let me see what that news did. 805, 815, and now it's not even today. What's today? The 17th? So it was positive, and then negative. So you got one negative and one positive, not really giving us the information we need. So I'm pretty much gonna manage it from here, guys. If you decide to take an early entry around this area, just understand if it decides to continue to go down, you'll be 10 pips down from our original stop loss. So you might want to change like your adjust your stop loss, guys. But other than that, looks good for me. I just gotta wait for it to come down, guys. But yeah, I like what I'm seeing. So appreciate you guys as always, man. Look out for the crypto lounge to be released pretty soon, guys. We're probably gonna start that up next month. Crypto lounge. If you guys were in the previous business I was in, I did crypto lounge where on Fridays or Saturdays, pretty much Fridays, I did crypto at like 12 a.m. in the morning. Well, going into Saturday, right? So like 12 a.m. in the morning. So yeah, I want to bring that out because one, that'll give a full pretty much day of Friday to go through where cryptocurrency, if we do decide to take live trades from there, the market will pretty much be moving in a way where we can make sense of it. I mainly use it for investing purposes, guys, like over the weekend, because trading kind of gets like redundant, you know what I'm saying? Because you give money back to the market, especially the way cryptocurrency has been for the past year and a half. But there's still some good moves. And even if we're not taking it from a trading exchange viewpoint, guys, on the investing side, this will help you guys be investing on the weekend. So it's like, I don't have nothing to do. Well, let me gain a little bit of knowledge in the cryptocurrency market and start putting my income towards those assets, guys, on coins that's profitable. One, by data, and then two, by fundamentals, which is going to be like what the big wigs are saying about like cryptocurrency. So hope you guys find value as always, man. See you guys at the top because I'm taking everybody to the top with me. Thank you guys. God bless.